In this section, we will learn how to accurately analyze a chart. If you don't know where you are in price analysis and how you intend to move, you will definitely not reach your destination. In this video, we will learn how price moves and reaches different levels on the chart, and after that, we will be able to fully analyze the chart. Financial markets generally have chaotic movements, and we must find patterns within this chaos to trade easily. Therefore, we will also examine price cycles.
Hello, and welcome to the Tradiology channel.
First, we go to TradingView so we can proceed with our chart analysis training. Always try to identify strong movements on the chart first. The trend will likely continue in the same direction for some time. This strong trend is called a spike. We always try to trade in the direction of the spike because it has a high probability of success. So, we understand that the movement starts with a spike. After the spike ends, we usually see a few candles in the opposite direction, which are called a pullback. If, in bearish spikes, a candle closes above the previous candle, it signals the beginning of a pullback. With the start of the pullback, we enter the next price cycle, which is called a channel. In a price channel, the slope of movement is less steep than in a spike, and we can trade in both directions. Price channels are often attractive areas for trading. If our channel is a downward channel, it's better to enter sell trades at the top of the channel to increase the chances of success. After the price channel breaks, we enter the trading range. This is where scalpers become very active, selling at the top and buying at the bottom. This pattern continues until the range is broken in one direction. When this happens, the spike cycle begins again, signaling the start of a new cycle. Now, let's move to the chart, draw a few cycles, and practice together. Here we have an upward spike, followed by a price channel. And after breaking the channel downward, we enter a trading range. Notice that within cycles, smaller cycles can also form. Pay attention to this part. We are in a very large range, and within this range, there's a smaller cycle consisting of a spike, a channel, and a trading range. Again, we see spike arrow channel, arrow range. After breaking the trading range, we enter a new cycle. Practice this with me. You can see that breaking the trading range leads us into new cycles again. Sometimes a spike, channel may form without a range, like here. And sometimes a spike, range may form without a channel. The market operates based on these cycles, so don't worry. Here, observe that we had a downward spike, followed by a range, but no price channel. After breaking this range upward, we enter a new cycle, which I'll now draw. Breaking the trading range downward starts a new cycle, consisting of a spike and a very wide trading range. After breaking the range upward, we enter a new cycle that includes a spike and a channel. I'll now speed up the video so you can see how I draw these cycles. Now that we've learned how to draw cycles, we must learn how to take positions based on them. When you see a spike cycle, you should only trade in the direction of the spike. For example, here we have an upward spike, so we should enter a buy trade during the pullback to maximize our chances of success. In the next example, with a downward spike, we should enter a sell trade during the pullback. We will do the same here. You can build your strategy based on this simple principle, which has a very high success rate. Now let's discuss channel cycle trades. In channels, it's better to wait for the third touch on the channel line. Draw your channels in the direction of the spike, and wait for the price to reach the channel line. Upon seeing a good candle, you can enter a trade in that direction. Here, the price reaches the bottom of the channel, and we enter a buy position, with the take profit at the top of the channel. Similarly, here, you can see that we can trade on the third touch of the channel, with the take profit set at the channel's top. In the trading range cycle, we can trade in both directions. In the first example, we entered a sell trade at the top of the range, with the take profit at the bottom of the range. If you enter at the top of the range, your take profit should be at the bottom. If you enter at the bottom of the range, your take profit should be at the top. In this example, we enter a trade at the bottom of the range, and the top of the range becomes our take profit. You'll notice that it successfully hits the target. Again, in this area, you can see how profitable these range setups can be. Now, I'll show you both the cycles and the profitable positions we could have taken on the price chart, and I'll speed up the video again. This is how you should analyze the chart and professionally open positions.
Thank you for watching this video. Please subscribe to my channel, like this video, and leave your comments below so I can guide you further. Wishing you success.